Hey everybody, I just wanted to update you. It is early September of 2022, and some of you are going to be watching this via YouTube. Some of you are getting this via your monthly HomeBot Digest. By the way, if you're not getting a monthly HomeBot Digest and you are a homeowner, then click a link down below and you can register and start getting a monthly digest from me. It basically serves as a bank statement for your home mortgage. We'll send you out monthly updates on what's going on in the market, and you get updates like this. So here's what's going on in the market right now. We're definitely seeing a slowdown. Interest rates have gone up significantly since the beginning of the year. Mortgage rates are hovering around 6% right now, and they change every single day. This is about the highest in interest rates that we've seen all year, and there's a good chance that we're going to see them go up a little bit higher. I don't think we're going to see much higher than what we're at right now, but we're literally tickling the top of interest rates right now, and it is the 6th, the Tuesday after Labor Day that I'm recording this. So what does that mean to you as a homeowner? Well, it means a couple of things. First of all, your equity is still really, really strong. Housing prices went up significantly in 2020 and significantly in 2021. We're seeing a little bit of a softening of that, especially on listings that have been sitting for a long time. We're about 50% or so, close to 50% of the homes on the market have had a price reduction. Well, some people think that means, oh my gosh, John, prices are falling and the market's going to crash. I don't agree. I think it's a matter of, first of all, it's sellers who are not understanding the market has changed, and they approach a real estate agent and say, hey, Mr. Agent, I want to sell my house, and my neighbor sold 6 months ago for $700,000, so I want to put my house on the market for $750,000. And the realtor doesn't have the fortitude to tell you the truth. Or 3 realtors told you the truth, but the 4th realtor said, sure, I'll list it for $750,000. When the truth is, hey, your neighbor sold it for $700,000 6 months ago. Maybe your house is going to sell for $675,000 right now. But you went ahead and put it on the market for $700,000, and then you have a price reduction and you go down a little bit. When the truth is, you should have priced it at $675,000. That's where a lot of the price reductions are coming from. Yes, we're seeing prices come down some, but you got to take it with a grain of salt when you look at listed this much and dropped by this much, because that listing price a lot of the time was significantly more than what it really should have been listed for. What that means if you're thinking about selling your home is, A, it's a really good time to sell a home and buy another one. Why am I saying that? John, I got a 3% interest rate right now. Why would it be a good idea to get rid of that and take a 6% rate? It's a good idea because you're going to be likely contingent on the sale of your home. And if you're contingent, the last 2 years, in 2020 and 2021, it's been super hard to get your offer accepted. And that was because sellers had so many choices. They had so many people to choose from that were thinking of buying homes that they could take somebody that didn't have to turn around and sell their home. And now we're in a position where sellers are willing to negotiate and accept a contingency in a lot of situations. I believe interest rates are going to fall sometime in the next 2 years. Now, are they going to go back to 3%? I don't know. But what I do think is that they're going to drop a lot from where they are now, because we're going to hit a recession. And historically, every single recession, we've seen interest rates go down. So when interest rates go down, all of the buyers that are sitting on the sidelines right now not wanting to buy, and the reason they're not wanting to buy is because rates are up and they don't want to spend more on their monthly payment, or they can't spend more because they only qualify for a certain payment. Those buyers are going to jump right back in. And when they jump in, prices are going to skyrocket, and sellers are not going to want to be contingent when they sell their home. They're not going to want to accept a contingent offer. So if you want to trade out your home, upsize, downsize, lateral move, now is a really good time to do it. You're not going to sell your house as high as what you might have 6 or 12 months ago, but you're also not going to buy the next house as high as what you would have 6 or 12 months ago. And so you're trading one house for another. Don't worry about whether the market goes up or down. You are going to gain or lose that regardless of which house you had, the current one or the new one. Finally, you're saying, John, I've listened to you about all this, and I'm not thinking about selling my house, so why am I even still here in 4.5 minutes into this video? Well, let me tell you, this is actually a really good opportunity to consolidate debt. If you have high interest credit cards, if your payments are getting over your head. I've got a lot of clients right now doing cash out refinances for a couple of reasons. First of all, the interest rates on your credit cards have skyrocketed. They're going to continue going up. The Fed is not done raising interest rates. We're going to see interest rates continuing to climb, and you're going to spend more and more on your credit cards, on your home equity line of credit, and the credit cards are not tax deductible. So if you consolidate your debt now, you're going to save a lot in your monthly payments, you're going to get more tax deductibility, and then in a couple of years when interest rates drop, you can refinance that loan, and at that point in time, it's no longer a cash out refinance. Now, why do I say cash out refinance like that? Because it's a higher interest rate. Any given day, I don't care when rates were at 2.5. If rates were at 2.5, that's for people who are purchasing or people who are just refinancing what they owe. But if you were pulling cash out, you paid 0.2 to 0.5% higher in interest. So doing a cash out refinance right now, you're going to pay a little bit higher in interest right now for a short term. And then my expectation, can't guarantee, but my expectation is in the next couple of years, we're going to see interest rates come back down. And when you refinance, you're no longer pulling cash out, which means you get the best terms at that time for the loan that you're going to keep in the long haul. And you can likely refinance with a shorter term. If you're comfortable with the monthly payment, when rates drop, instead of taking a new 30-year loan, you might be able to do a new 15-year loan with the same monthly payment you're paying now. I know I've gone on a lot, but I wanted to give you an update. The other thing is, if you're looking at this through HomeBot, I have not confirmed whether HomeBot is really keeping track of the changes in market temperature. I played with it a little bit this morning. I did see where it's starting to show some cooling markets. So pay attention. The videos you get in HomeBot, I pre-recorded based on, hey, is it a sizzling hot market, a cooling market? Those may or may not be 100% accurate. Call me if you have questions. I'd love to chat with you about this. And if you have any questions or if you know anybody who needs great advice on a mortgage, please don't forget about me. Hope you have a wonderful day and we'll talk to you soon. Bye-bye.